Hello everybody, in this video I'm going to be taking a brief look at Sony, and this is really not so much going to be a deep dive into their financials, but more so me taking a quick look at the company and kind of giving my opinion on the overall industry. So here we take a look at Sony, ticker symbol SNE year to date. It was up around $68 towards the beginning of the year and only dipped to about $51, so not getting hit nearly as hard as many of the other tech stocks or similar stocks out there, which is pretty surprising. And if we take a look at the 5-year chart here, we're seeing a really positive picture. I tend to look at charts more for long-term growth rather than looking at a shorter-term swing trade. And looking at the 5-year chart here, there were about $30 5 years ago, and at their recent high, they're at about $74. So really strong growth here without any huge launches in the last 5 years either. And if we take a look at revenue and earnings here, we see relatively steady revenue with maybe some slight increases until 2020, and then major drastic increases in earnings from 2017 to 2019 year over year. And we only have quarter one data right now for 2020, so that's not really too telling yet why there's a little bit of a slump there. And as we can see again here for the last 3 quarters, other than the beginning of 2020 with just marginal earnings, they've had drastic increases in revenue as well as increases in earnings. And you can see on the left side here, I had no idea how much money they were actually bringing in. As you can see, in just quarter 4 of 2019, they were bringing in about $2.5 trillion, which is just really an incredible number. And I really don't usually pay too much attention to this, but if I just scroll down from the revenue and earnings there on Yahoo Finance, I can see an analysis recommendation rating, as you can see there in the top left, and it's at 1.2, which is actually really, really rare on Yahoo Finance. Even for a really strong company, they'll usually have a 1.8 or 1.9. And then for the analysts' price targets, you can see a much higher price target than the current stock price of an average of $74, which is just a little bit of a higher than the market value of the stock right now, but still a nice little increase there. In just a second, I wanted to talk about some of the points made by analysts at Morningstar, which are given on Robinhood. But before I do that, I really want to say that the most important thing for Sony is to release the PS5 this year and have better sales than the Xbox. As many of you know, the PS4 did much better in sales, just pretty much across the board over the Xbox One, but the Xbox Series X has already come out with better specs than the PS5. So if they come out with very similar prices or the same price, then the PlayStation 5 could be in some serious trouble. And there's a ton of PlayStation fans out there that could not disagree more. But another thing to think about is that Microsoft is the second biggest company in the world by market cap, just under Apple, and Sony is much, much, much smaller in comparison. And Microsoft is acquiring video game publishers left and right, and there's really not a whole lot that Sony can do to kind of outcompete long term. And if you're familiar with Xbox and PlayStation, you may also know that PlayStation currently does have a lot more original games, especially really popular ones, but that may be changing in the coming years, especially on this next generation of consoles. Now, looking at the research report overview by Morningstar on Robinhood, we can see that they were given a Morningstar rating of 3 out of 5 stars, and I would disagree with that. I'd say it's more like 4 out of 5 stars. Pretty strong company still. They don't have much of an economic moat, which I would also disagree with. There's really low switching costs, which I think is the main reason they said that, but they do have an extremely strong brand and die-hard fans. They gave it a fair value of $68, which, I mean, I would say it's about right. They're about $64 there, so already near that, but they're probably going to get up into the 70s easily. Uncertainty is high, although there is some uncertainty there if they're going to be able to compete with Microsoft long term. I think especially in the next few years, they're going to be able to make a ton of money regardless. And then stewardship standard, don't know a ton about their governance or top management, but I would agree with standard there, I suppose. Now I'm going to take a look at a couple of points by the Bulls and the Bears by analysts at Morningstar. And the first one is that while tough competition in the electronics industry will continue, the capable management team can control the risk. And I don't think either of these are particularly strong points. I mean, that first one is just kind of fluff. You could say that at just about any company that's not really struggling right now. And then the second one is PlayStation virtual reality will not only be used for games, but also be used for a breakthrough of it for entertainment and media's such as movies, music, and sports. And people have been saying this for years. The virtual reality is going to be the future of everything. And I mean, there really haven't been any big breakthroughs for gaming, especially. No game has really been so great that people had to go out there and get a virtual reality headset. And what I think VR really needs is a game like, Skyrim, The Witcher 3, Red Dead Redemption, one of these huge games that everybody thinks is absolutely amazing, that's so good people have to go out there and get a virtual reality headset for. And really, there's only been subpar games out there for the most part for VR. Now I'm also going to take a look at a few points by the bears at Morningstar. And the first one is that digital appliance businesses, especially handset businesses, are extremely competitive, and therefore Sony's not going to be able to make a ton of money off of these, and they're going to have really slim margins and able to just be able to sell these handsets. And then the second point is a pretty good point, actually, for the bears, and it's because of overcapacity and depreciation of the US dollar. Sony's not going to be able to regain a ton of profitability, and the US is one of their biggest markets, if not the biggest. So there's a huge issue here with depreciation of the US dollar for them, and then not being able to make a ton of money, which is definitely hurting their profits. And then this third one, I really don't know if I necessarily agree with. The PlayStation 4 and PlayStation Virtual Reality are too expensive. I mean, sure, but virtual reality shouldn't even really be in the picture right here. It's not huge yet, like a lot of people are saying. It's not going to be the new massive thing used by everyone in the next few years. I think it's not going to be widely used probably even in the next 10 years. And it goes on to say people will be more interested in the augmented reality experience used by smartphones. And I don't even think it's too expensive, honestly. I just think that there's really not any real great reason to use virtual reality for games yet. It hasn't really been figured out to the best of what it can be one day. And that's not to say that virtual reality in gaming isn't going to be huge. There are certainly people that absolutely love it, but I think for the most part, traditional gamers are going to prefer to just use their controller as they have been for decades. I've got a ton of brief stock analysis videos on my channel very similar to this one, so be sure to come and check that out. Subscribe for more content, and thank you so much for watching.